Dhiren is saying, what is the reason you give less preference to order flow? It is the time frame, Dhiren. You need to understand, it is the time frame. Alright, time frame as in how long I am planning to hold my trade. So let's say I am planning to hold my trades till next expiry. I am looking at taking credit spreads. In that scenario, what happens is I cannot look at the order flow because it's not required. It's too short term for me to look at the order flow charts, and the information is too frequent. But let's say you are a scalper and you want to scalp, alright, you want to look at, so this is today's, this is 15-minute chart, alright, and this is today's activity. It starts here, 15:30, and this point onwards is our today's development. You look at the profile chart, and what do we see? We see that yesterday was a poor low. It's not a very good structure. Some anomalies left behind and all. And then you see that market opens here, goes back up, and in B period again comes back down. So we have a lot of overlap between A and B period, and then C period starts somewhere here lower, or no, C period may not have started lower, but since the B was having a lot of overlap, it was difficult to say that we might be taking out yesterday's high easily. Let's say if market opens here, goes back lower, and this is how A period is, and this is how B period takes out yesterday's high. This is actually strong. Then a C period pullback can be bought. 2 days VWAP, or this is not happening like that. We open lower, we test a little lower, then go back up, come back down in B period. This is sideways movement. Whenever sideways move is happening, it is difficult to expect a clean breakout. So now we are testing here. Now when the C period is going towards yesterday's, and if you're a short-term trader, you want to scalp, you should be looking at order flow chart. So if I look at the order flow chart, I need to find evidence of a few things. I need to see whether I am getting stop hunt. So it just takes out stop losses above yesterday's high, and then it reverses quickly. So now if I look at this chart, let us see where yesterday's high was, 44,730. So let us go here and plot 44,730. Alright, so do that. You will see this is the level. Alright, that is your high. Now what happens? You go above that, you leave behind a lot of empty cells or rows. That means there was no, I see a lot of zeros left behind, and this means that there was no one interested in trading here. I see a big order, alright, and this is what? This is an aggressive buy order. So aggressive buy order is met by limit sell order. Please understand. So why aggressive buy order? Because obviously above yesterday's high there are buy stops. So they are now triggered. And what are they met with? Limit sell order. And then prices immediately come back down. So as soon as they come back down, that I know that they have left behind this area where there is no trading. So there is absolutely no interest here. So market just went higher, or it was purposefully pushed higher for this, to catch this liquidity, these stop losses. And now the market has reversed. So market has no interest in trading higher. Now it starts to go down. As soon as you see this stop hunt, you can start looking for sell trades. So how can you sell? You go to the VSA chart. And now here, unfortunately, what you will find is that there is absolutely no trading or no time spent as soon as this was done. So on a 3-minute chart, even we do not have a signal. So what can you do? You can wait for the market to go below VWAP and then try to take a short. So you can sell this pullback, get a scalp out of the market. If you are one of those risky traders, as soon as you see a stop hunt here, you can sell in this strength and then look for a reversal. But you also need to understand that today's day is kind of a sideways day. So as soon as you are reaching the bottom of this today's perceived range, you need to be very, very realistic about your expectations. So let's say you are selling this pullback. Don't expect the market to fall like this. Take your scalp and get out. Don't expect too much from the markets, because it's already traveled all through the range. But if you are selling somewhere here and you expect probably this low to be tagged, or maybe test of the bottom, you come very close to that. So then you should be getting out in this zone near the bottom of the range. So that is a very, very good intraday scalp, trading based on stop hunt or selling pullback to VWAP. But if let's say this happens and market rejects and then just from one bar higher gives you a no demand signal and then starts to go down, you can short below the low of this bar. You have to anticipate these kinds of things if you are going to trade intraday and on very shorter time frames. All right, but since my time frame is a little higher time frame, I do not have to look at order flow all the time. That does not mean like if I decide to do this kind of trading, if I want to take a scalp, I'll definitely look at order flow and see whether I am getting some of those signals like the one we got here today. But now what will happen is, what traders will do, okay, didn't talk about stop hunt and then the market reversed and it gave let's say 100 points on bank nifty. Let me try that. No, don't do that. Stop hunt is not enough to give you a reversal. I just discussed this point in I think yesterday's session only, regarding the stop hunt versus stop triggering. All right, so stops can be triggered. That does not mean those were hunted because you're not really sure whether the market is going to reverse or not. For that you need context. We had context today and that told us that there might be a reversal and we get a stop hunt which will look exactly like stop triggering. In case of stop hunt, you will get immediate rejection and those zeros will be left behind. So you get an island of trading higher and then immediate rejection is there. Now you go ahead and take your short trades, right?